Hi. Whether index funds or else passive funds are actually meant for the beginners, and also by adopting the passive funds or index funds, we are actually reducing the risk of equity market. Let me try to answer to these two questions. Many of us have a firm belief that, or else in this financial industry, it is planted in such a way that passive funds are actually meant for the beginners and active funds are for the matured investors. But let me tell you the reality. Passive funds are actually meant for the matured investor who already experienced the underperformance of the active fund and they are fed up with a high fee structure. So for that reason, they are moving away from active to passive. This is one aspect you have to look for. And in fact, when you adopt the passive strategy, if you don't have a passive mindset, then obviously one day or another day you again come out from the passive strategy and move to the active funds. So for that reason, just because the funds are popular or just because someone is saying that index funds are popular, don't jump over there. You must have a proper passive mindset to invest in index funds or passive funds. The second thing is about the risk. See, by adopting the index funds, you are not completely removing the risk. Market risk used to be there. The only risk what you are removing from the index funds or passive funds is a fund manager risk, because in such a products there is no role for a fund manager. So for that reason, assuming index funds are for the beginners or else by adopting the index funds we are reducing the risk is completely a myth. Don't believe on all these strategies. If you have a passive mindset, if you don't want to clutter your portfolio, then only invest in passive funds. And market risk used to be there. So for that reason, to de-risk yourself, you must have a proper asset allocation between debt and equity. I think these 2 points are very much important before you blindly adopt the index fund strategy. Thank you for watching this video.